So thank you for joining us. I know it might not be easy on this wet morning up the other end of the field after maybe some sore heads, some sore throats. I know my throat isn't the best it's always been. A lot of shouting in the dance tent. So we just to make sure you're in the right place, we're going to be talking about natural capital markets, environmental markets, also known as ecosystem service markets. And I'm going to introduce you to the panel in just one moment, but just to give you a sense of who I am. My name's Helen Avery. I head up nature programs at the Green Finance Institute. And I'll just really briefly explain what we do so you know I'm not here trying to sell you anything, and I'm certainly not trying to sell you green finance. We were set up by government about 4 years ago to work with private sector, to work with companies in the finance sector to see how we can get them to start moving money into helping the UK hit net zero, and that's since expanded to incorporate many more environmental targets for the UK. So I oversee the bit that look at water quality and biodiversity uplift and soil health, woodland restoration, that kind of thing. And we essentially look at what are the means to getting private sector capital moving and into the hands of farmers and land managers so that they can decide what to do with nature restoration, should that work for their business. And there are many, many tools to get there. We host the Task Force on Nature-Related Financial Disclosures, which is called the TNFD, and I won't mention it again because I know we don't want a load of acronyms flying around. But essentially, as of September, companies around the world will start being able to report on what their impacts are on nature and water quality and soil health. And then hopefully it might be mandated down the line. But that's one tool of getting private sector capital moving. And another tool, as I think we all know, is nature markets. And that's what we're going to be talking about today. And we put this panel together, thank you so very much to everyone for coming and agreeing, really just to sort of talk through what are some of the questions that everyone might be having at the moment. It sounds really exciting. Yeah, I'm going to sell carbon. I'm being approached to sell B&G for thousands and thousands of pounds. But I'm sure you have concerns, and we're going to talk about them today. And Rachel is going to be our proxy for the audience, our guinea pig exemplar farmer, and she'll introduce herself in a moment. But first, before we get started, I'd just really be interested to hear where we are in the room in terms of really, really confused about the opportunity available to, I think I'm all right with it. So anyone really all right with it and already engaged in making sales? Got a few here. There's Julian. Great. Okay. Anyone sort of in the middle? Middling, probably majority. And anyone well, what the hell? I've no idea. That's worrying. Our panel of experts. Brilliant. Okay, great. Well, just to let's introduce the panel. So I'm joined by Rachel Hallos, and she'll introduce herself in a moment, who's a farmer from Yorkshire, who is not engaged in natural capital, but we're going to see how she feels about it as we go along. And we're joined by Digby Sowerby. You may know him from Environmental Farmers Group. It's a co-op that works with farmer clusters that sells collectively natural capital. So super interesting. Let me just turn this chair so I can have my back to you over there. Tim Hopkin is the founder and director of LandApp. So they work with farmers and land managers to assess what some of the natural capital opportunities are, in addition to many other things. That's beyond my pay grade because it's all to do with data. And then joined by Ivan de Klee, who's with Nattergal. NEP, a part of Nattergal, if you're familiar with them, they are a project developer, essentially looking at nature restoration on landscape scale, using private finance to fund a lot of that nature restoration. And then finally, but not last, is Sophia Klee. She's joining us from Sisters Burkitt's. And Sophia works with projects all over the UK and farmers on how to access nature markets. And we'll share all the ins and outs of what you need to know about tax and also long-term contracts and things like that. So we've got an amazing panel of experts with us. But first, so Rachel, let's get started with you, as you're going to be the one we're going to be testing whether we're getting some good advice or bad advice. Are you more confused, less confused, that kind of thing? But first, just tell us a bit about what you've been doing in your farm, and also high level, are you what the hell with natural capital markets, or are you, I'd like to.
Shall we start at the what the hell bit? I think that's the best place to start. So our farm, we're in the South Pennines, which is the backbone, if you imagine, coming down the country of England. We're a hill farm. We run beef, sheep, And one of our diversifications is environment. We've been doing it for 20 years now, originally in countryside stewardship. We are now in HLS, that finishes this year, and we've actually elected to roll it over because we think it's the best scheme for us right now. Better the devil you know, if you like. It gets a little bit complicated now. So we're a tenant farm. So it's myself, my husband, and I've got a 26-year-old son and a 23-year-old daughter coming into the farm. So my role has changed within that business. My role is to ensure the longevity of the business, draw down more income. What else can we do? We are restricted in so many different ways and forms, and I'm going to explain why that's the case. So we are a Yorkshire Water tenant. Yorkshire Water is the second largest landowner in Yorkshire. As you can imagine, they're quite keen to know what goes on their land, so there is no inputs allowed on our tenancies at all. So that fits quite well with quite a lot of the environmental schemes that are out there right now. So we have to have Yorkshire Water in mind, everything that we do in the farm. We also work in partnership with the RSPB, so that's another one. We've got a relationship with an organisation called Moors for the Future, where we actually do flood alleviation work on the farm, up on the tops on the moors. Should have told you it's 2,000 acres and majority moorland. Who else have we got kicking around? We've got Environment Agency, purely because it's water and it's drinking water, so we've got water catchment running into one reservoir, and then we've got another reservoir below the farm, which is actually compensatory water for the river system. So there's a whole host of things going on. And let's not forget as well, we actually changed our business model back in 2003 to actually enable us to do all this environmental work. Very typical South Pennine farm where we had some cows, we milked them, delivered them to all the people that lived in the valley bottoms where all the mills were. Quite a heavy textile part of the world. So we've jumped, if you like, business once. I'm now looking as to where we go next. We've got a whole host of people that we've got to satisfy in all this. We're already doing great environmental work. Well, I certainly think it's great environmental work, and kind of just be a little bit bold now and say we've actually won an award for it. So I quite like that, you know, tap on the shoulder and all the rest of it. But we've got to get ourselves in another place now where we've got to secure the future of the farm whilst keeping all those other people happy and ensure that there is a sustainable business going forward for the next generation that's coming through. So I very much see the environmental work that we do. Yes, it's the right thing to do, but it's very much an income stream for the farm. And I guess that's why I'm here today, because I need to know what is the next step. Because everybody's talking about green finance, and we hear these huge figures that are being bandied around by governments, as in what they were expecting to actually happen in the very near future. This is now. This is not in 10, 15, 20 years' time. This is starting to happen now. And I'm thinking, am I going to miss out on this? I need to make sure it's right, and I need to make sure it's right for the future.
Well, anyone agree with Rachel that they're in that same position? Probably quite a few. So in terms of like the questions we're going to put to the panel, are there any sort of key? Is it the usual? You know, what are my opportunities?
I mean, the bottom line is, what's in it for me? Right. What's in it for our business? As well as the environmental impact that it's going to have on the farm. But there are so many other people wanting a piece of that action. Yeah. So there's not just me as a farmer being told, well, you've got to cut your inputs, you've got to deliver net zero on your farm. You've got a supply chain that's saying, we don't want to buy from you because unless you hit net zero. You've also got a water authority company, which I know I'm slightly different in that, but don't forget a lot of land actually tenanted out is actually owned by companies like that, so we can't ignore that. They're also being asked to hit their targets. So who does all this belong to? Is it mine to sell? What are the tenancy implications? What are the long-term contractual implications? I don't know.
Right. Okay, so well, we're going to attempt to at least shed some light on whether we don't know yet some of those answers, or whether we do. So Ivan, maybe I'll come to you first. Could you just start by kind of sharing, from what you've seen, what are the sort of opportunities at the moment for land managers and farmers when it comes to things to sell, I suppose?
Sure. Thanks. And can I just ask you one quick question? The amazing environmental work that you're doing already, are you being adequately rewarded for it?
The reason that we've stayed in the higher level stewardship scheme and we've rolled it over, if you like, is because I believe it's the right scheme for us, because if we had an extremely good working relationship with Natural England, which is another partner that we're working with, and if you like, they really made sure that we were getting the best financial reward for it. I need to know, is there more that we can do?
Sure.
And can we get paid for what we've been doing for so long?
Yeah, and I think that's really, really important and potentially pretty difficult to show and difficult to do. Like, all of this is so difficult. And just full disclosure, the work that we do, or I'm doing at the moment, is rewilding. It's land out of production. But I have spent 4 years working as a farm cluster facilitator and immerse myself in the farming community as well. And what we're trying to do at Nattergal is show how these systems work on a large scale, on a big project, to then break down and take out into the farmed environment. So it's sort of like model demonstration, really. But the opportunities, and everyone in this room already knows them, really. We hear a lot about biodiversity net gain, 25,000 a unit, 90,000 a unit, 10,000 a unit. You know, all these numbers that are thrown around as if it's this golden goose that's going to change all of our lives. You have soil carbon, and there must be 10, 15 people here at Groundswell selling a solution to sell your soil carbon. Well, if you're a hill farm with lovely soils already, where's the additionality there? That's a really that's a really difficult place to go. Then there's voluntary biodiversity. Do corporates want to buy biodiversity units from you? And that's not using the DEFRA, that's not using habitats, that's measuring across your invertebrates, your soil fungi, your soil fauna, your birds, your bees, which has a huge cost implication as a starting point, getting that baseline in place. And then there's elms and the uncertainty around it, and can you be paid for what you're being paid for already? And so much of this comes down to, all of this conversation comes down to additionality, this idea that you are being paid to do something new. And so the opportunity for government, my feeling is, to fund the work that everyone's doing already, because I don't think the private markets will buy into that, really. That is the role for government. They should be rewarded, and it should be a decent payment. And the new stuff, the additionality, that's where the private market opportunity is. So, yeah, I just don't want to tell everyone to suck eggs. It's biodiversity, it's carbon, it's clean water, and it's all very, very geographically specific. So if you're in a high development area, opportunity for net gain is high. If you're in a neutral catchment, water credit opportunity is high. If you have degraded soil carbon credits are high. So it's location specific. And if you're farming a farm like it sounds you are, it's going to be really difficult. It's difficult enough from a poor baseline. From a high baseline, it's really challenging. So hopefully we can shed some light on that. But rolling over into HLS seems like a completely logical, clever thing to do at this moment. But there will be more things to do. And the reason I referenced rewilding and land use change at the beginning is the markets at the moment will require that change. Not a full rewilding, but they will require an additional change from conventional tillage to multi-species cover crop, no tillage, or from low quality grassland to high quality grassland. A change is required. It's not a maintenance payment. So it will be about looking at the parts of your farm where you think actually that could be better from a nature point of view. That's where the opportunity is, I would argue.
Ooh.
We should have given you a really big arrow that is on a board, and that you can sort of show more confused, less confused as we go along each panel.
I'm now wondering why we did what we did 20 years ago.
No, because you should be, that is why you're in an HLS scheme, though. That not HLS. Yes, HLS. I thought I was talking about the lottery fund. No, HLS. That you should be paid for that in perpetuity by the taxpayer, because you've been providing that public good for us for the last 20 years and going forward. So you shouldn't, I'm not arguing you won't be paid for that. I'm just saying it might come not from the private markets. Maybe.
Sophia, maybe coming to you, in terms of like the structure of like what the opportunities are you going to do it yourself? Are you going to sell a bit of your land? Well, not in your case, but have someone else come and do something on your land and pay you for that? What are the options available?
Yeah, so thank you. It's been very interesting to listen to both of you. So what we do as lawyers is we generally get presented a solution. So someone's come to you with an opportunity, and then it hits us. So I can tell you what they look like, the different ways that they're structured. So you'll either get someone come to you and they'll want to just buy, or in your instance, you might get Yorkshire Water come to you and saying, can you give up part of your tenancy because we want to put it into some kind of nature-based solution. So that's, we're all aware of that kind of model and how that works. You then might be approached by someone that wants to take a lease of your land. So we've heard about habitat bank providers, the Environment Bank being one of those, or carbon plantation businesses. They might come to you and they might say, we want to take a lease. So in your instance, it might be a sublease with Yorkshire Water's consent. That they would then come along, they would take a lease, and what you would get would be a rent from that. Generally, we're seeing about 3 or 4 times agricultural rents within those leases. And then the tenant of that, so the habitat bank provider or the carbon plantation business, would be the ones that create the habitat. So they would do the work on the ground to create that. They would be the ones that then sell the units off, and they would be the ones that take the revenue from that. So your income would be your rent. In some instances, they will also put you back in occupation and make you the manager of that land for the 30-year, 60-year period, and you can get another cut of the cherry that way. So that's the kind of leaseback model which some providers are offering to you. That's quite low risk from your perspective, because you're not the one that's going to have to fork out to create the habitat, and also you're not the one that's going to have to try and find the marketplace to sell the units. So lower risk, but probably lower reward, because someone else is going to take a cut of the cherry. So that's the kind of lease and lease back. And then the third way is if you self-deliver. So this would be where you outlay the capital to put the habitat in place or to plant the trees, whatever it might be, and then you sell the units on. So slightly higher risk from a monetary perspective, and also from a capital markets perspective, because there may not be a marketplace there to buy your units from, but you ought to think that would be a higher reward model. Within that self-delivery sphere, there's also a whole range of promoters, agents, brokers who are all trying to help you in that process. Some might be sat next to you here, and what they'll do is they might come to you and they'll say, we'll help you promote your land for natural capital opportunities, and what they may even also say, and we will pay for the habitat to be put in place when we come up with the agreeable solution. But then they're also going to say, and we'd like a little cut from the units when we sell them. So you've slightly de-risked that self-delivery model in that instance. So those are the kind of 3 main ways that you're going to get opportunities. And the best piece of advice that we try and give is, firstly, don't panic. You're not obliged to do this. It's an opportunity. It's a good thing. Historically, like you said, all you could do was food production. Then you had your HLS. Well, now, you've got all these other things, but you're not obliged to do it. So don't panic. It's an opportunity and something to look at. And the other piece of advice, we as lawyers tend to get presented with the solution. So a landowner will come to us and saying, we've been offered this deal with this land promoter or with this habitat bank provider, and we'll always say, stop, step back, have a look at all the opportunities as a whole, and don't just jump into the first person that knocks, because there's some great salespeople out there at the minute. They're going for it. And some of them are fantastic figures, and it may be the right opportunity for you, but our advice is stop, step back, have a look at all your natural capital opportunities, take specialist advice, and that may be from people here, that may be from agents, accountants, and make an informed decision on the way that you jump, if you jump. Oh, one more thing, sorry. And you can either go, so obviously, most of the time as landowners, you've been used to, you've always collaborated, around a pub table, around a kitchen table. But actually now there are landowners out there who are collaborating in these, 3 different ways with other landowners. there's experts here that are doing that. And so when you step back, also look at the opportunities of what your neighbours are doing and whether you could be working with them as well.
And Digby, will come to you in a moment about exactly how you start to work with other farmers, if indeed you want to work with your neighbours. Are some of them here? We should probably just... how are you feeling so far?
I think I absolutely agree. I think this is a choice, but everything that we do is a choice. Nobody makes us farm. We do that because we want to do it. I think there's a caveat on all this, isn't there? I mean, ultimately, you're quite right in saying that you've got a choice to do this. I have concerns about cash flow dropping within the industry because of reduction of BPS, etc. I have concerns about big numbers being waved in front of people's faces and people going, yippee, I'm having some of that, and then 30 years later, what have I done? Or even, not 30 years later, but realising the commitment. So I think that's a really interesting point to make, and I think all of us in the room need to take heed of that one. And I think what's clear to me is that whatever we do on our farm, being a tenant, we're going to have to have some serious conversations with our landlord right at the beginning of all this to get their viewpoint on it, to see where they are, because whatever we get, they're going to want a section of that. They're going to want a percentage of that. And I guess that's a negotiation where somebody like you guys get involved. Don't try and think you can do this on your own. This is getting really complicated with some high-level finance getting involved, and there's going to be devil in the detail. Am I right?
Yeah, so I can quickly talk about tenancies if you like. So you're absolutely right. I mean, if you have the old Agricultural Holdings Act tenancies, which I think you do have a couple of, don't you?
We've got 2 HHs and 2 FBTs.
Yeah, so your old Agricultural Holdings Act tenancies, is almost certain that there is not the ability for a tenant to diversify. I don't need to necessarily, I've seen all the ones I've seen, there is not the ability to, and that makes sense because it wasn't anticipated when those were entered into, and you need to be really careful about doing it unilaterally because you may take yourself out of the protection of the Agricultural Holdings Act, so be really careful what you do. Equally, if you're on the flip side, so yes, you will need to speak to your landlord, it's a negotiation. If you are a landlord in the room, there may be an opportunity to get land back from your tenant under the change of use provisions under the Agricultural Holdings Act. Maybe, I caveat that massively, but it may be an opportunity to get some land back from your AHA tenants under the change of use provisions. It would be a case B notice. If you have a new farm business tenancy, what we're saying at the moment is every time a new tenancy is granted, whether you're landlord or tenant, look at it and think about natural capital. Have the conversation at the time, because there's opportunities here for landlords and tenants. A landlord could have an opportunity for a tenant, a keen tenant who wants to do this, to be the one that actually does the work, pays it, funds it, and you as a landlord get this extra revenue share when you thought you were only getting if that's what you agree, if you thought you were only getting a rent. And if you're a tenant with an existing farm business tenancy, again, be very careful breaching the terms of your farm business tenancy without checking it. Again, as a landlord, you have to be careful if your tenant is going to unilaterally go off and do these things, because the tenant may inadvertently find themselves protected under the Landlord and Tenant 1954 Act. Yeah. So, but you would be in breach of your tenancy. So tenancies as a whole, and we've obviously had the ROC review and everything else, so it's all being looked at the moment to try and make the marketplace more accessible for tenants. But at the minute, it's not a great place for tenants without negotiating with their landlords.
Barometer, this way, that way.
It depends what it's worth.
Okay. Well, Tim, maybe let's come to you. You have frustrations. Have a family farm, and therefore set up land app. So tell us, how do you think Rachel starts really sort of delving down into thinking about whether it's an opportunity for her or not?
So it is obviously incredibly complex at the moment, and to navigate it, I don't know if it's going to get easier over the next 18 months, 2 years. There's a lot of decisions to make from, government and through the private sector as well. But just a bit of context on Land App, because I think it's pretty relevant in this forum. So I studied Region Ag about 13 years ago. So Land App really is born out of my own frustration on our family farm, trying to work out how we use the farm properly and continue to have the ability to derive an income that allows us to keep the farm. So I'm fourth generation, so I definitely didn't want the farm to be sold on my watch. So I was trying to work out how to make sure we had ongoing income. Region Ag felt like a very sensible model to use on the farm. We're 90 acres, so we could turn it into like a diversified demonstration farm. And when I tried to apply the Region Ag principles to the farm, it was paper maps and Google Earth. It was really complex to scenario plan, to work out, all of the different options that we had at our fingertips, and also to get advice, because advice wasn't freely available or openly available for Region Ag back then. So back at that sort of stage, I was thinking, well, wouldn't it be great if there was a tool that just gave you kind of a digital version of your farm, which was malleable, you could play with it, you could create multiple scenarios, you could get advice, and then ideally you'd also find out what market opportunities were available to you. Is there a water company that wants to fund you? Is there new government funding available specifically for where your farm is? So I guess that was the thesis that we built the company from, is just to empower land managers to be on the front foot, to know your position and to be able to trade effectively in the market. So I guess we still obviously hold that principle, and which is why we've got a free version of Land App. So I guess the way that we always give advice, although we're not advisors, is if you can get a digital version of your farm, so all of the field boundaries, et cetera, you can very easily start to assess what is your biodiversity net gain baseline, so where are you today in terms of number of units. You can see market opportunities like bug life beelines, or if water company funding is available. So you get what have I got, what does that mean in terms of credits and units. You then can see the market incentives, and you can design your projects and schemes aligned to those. So all of a sudden you're saying, okay, I will do this, I will do that, a bit like designing countryside stewardship. And then the beauty of it being digital is that data can be shared with these guys, etc., and they can go and support you to go and access these new markets and find new money, new income streams. So this is kind of the world that we sort of sit in, is once you have that digital version, you can productize those things you're going to sell to the market: clean water, air, biodiversity, etc. And it puts you on the front foot to go and negotiate trades on your terms. And actually, I think this is probably one of the advantages of the ambiguity in the market. We shouldn't all just sit back and be price takers. I think there is a massive opportunity to collaborate and go and force the market to work for land managers, because it's only land managers that can provide the food, the water, et cetera, that the market and civilization fundamentally needs. So I do think this space of ambiguity is in our advantage if we can collaborate and kind of push these arguments back up the chain to DEFRA and to corporates. And I think that's what these guys do so effectively, is actually work with multiple farmers within a landscape, digitize that whole group, and then you have an argument to go and trade in the market on the front foot. So I think that's what I would say, is just if you can create a digital version of the farm, you can work with facilitators like these guys, all of a sudden you've got people advocating on your behalf for proper trades, and it just takes a lot of the pressure and burden out of your core day job, which is fundamentally farming. So I guess that's always the advice we give, is just get on the front foot, know what you've got, know what you can trade, and then work as effectively as you can with other people to make that possible.
Thanks, Tim. Need to mull on that one. How are you feeling?
I get what you're saying. I'm actually thinking, well, I already know what I've got because I'm already being paid for what I do on the HLS, which goes back to your point about we're going to have to do something extra, something different on top of what we're already doing. How do we do that? So I'm going through a thought. I'm chuntering along. It's all right. Piecing it all together. It's a bit of a jigsaw. I've done this. I've done the edges. I've got that bit there, and I'm sort of like starting to form a picture. And if I'm not careful, I think I know where I'm going, and I need to pull that back. But we'll talk about that afterwards when I've heard from you all, because I'm frightening myself a bit now. So.
Any reflections, Tim, Ivan, before we go to Digby?
Well, I was just going to say you are being paid for the public good you're delivering at the moment. So in a sense, you're not the wrong person to be in that seat over there. But
That's really
you
good to know, thanks. Feeling quite sad now.
You are making the most of the opportunity in front of you already, and you are delivering a public good to the nation, and the nation are paying you for it. And that is how subsidy should work. You know, it's a service that we're all buying from you. Thank you so much, by the way. And
you're welcome.
If the private market wants to buy something, they want to buy something that someone else isn't already paying for, basically. So you either have to stop taking that funding from the government and make a business case on why the private market should pay for it instead, which is possible. But and we'll talk about blending and stacking and elms and all of that rubbish in a second. But you will to blend it and stack it is going to be a difficult business case at the moment, because you're already taking that nice, good quality, high payment from HLS. So it is difficult to bring in a second revenue stream for a service you're already selling, basically. So you need to I feel you need to either sell something new or repackage it in a way that you say, actually, taxpayers, you only have to pay for a quarter of this or half of this, and the private markets will pay for the other half. And that's what a blended finance plan is, in essence.
I'm getting this. The cogs are ticking. They're going.
And you are the right person to be here, Rachel.
You're definitely the right person. If you weren't taking any money, it'd be easier.
So I like to be complicated. Life is complicated. What we do is complicated.
So, Digby, let's come to you then, and then maybe we'll do just like a quick reflections and then open it up, because I'm sure you have lots of questions. And I say we can. You might not be in Rachel's position, so we'd love to hear all different examples. Digby, I think where you can really shed light is on how you might come together with your farmer cluster, with other farmers, to then be able to, Tim's point, collectively trade and really sort of command a higher price. So can you just tell us sort of briefly how that works? Does it work for a tenanted farmer under your model? We know there are multiple models of aggregation at the moment, and DEFRA's now said that they're launching another round of the Natural Environment Investment Readiness Fund, specifically for farmers to look at aggregation models. We don't know how much that'll be or exactly when, but they've said they're going to do it. So over to you.
Thank you. So if I start off, I think with the benefits of the collaborative approach. Firstly, you are looking, all these landscapes are connected, and so it's about the quality of the change that you're delivering. So as an individual farmer, you can deliver a lot of change on your farm, but how is that affecting the whole landscape? And so working collaboratively, or at least in tune with what else is going on in that landscape, then that is a benefit both to the buyers, but also from an environmental side from the landscape. So that's the first benefit. The second benefit is to do with bargaining power. So if you're working together in a group, you have much more ability to bargain with the buyer. So we've seen it a lot at the moment with Environmental Farmers Group and some of the early stuff that we're doing, where we have a housing developer who has to offset their impact on the river with us. And they've gone to 3 or 4 farmers down the river, but because they're all Environmental Farmers Group farmers, we're able to go to them and give them a fair proposition based on the commercial value of the land. So like Sophia was saying earlier, you have different models. Some people might want to lease a parcel of land, but then you're not getting a good return on that. But having the aggregated model, you could go in and negotiate essentially the better price because you've got the power of numbers. And then the third benefit is to do with knowledge sharing. So, of course, working as a group, you gain market intelligence, but also environmental intelligence and intelligence on the natural capital markets. So you're understanding what are the very best products out there that we can do, who are the very best providers, who's buying, and that all helps reduce the risk for you as a farmer to have confidence in what you're doing. But then also for the buyer, it gives them confidence behind this brand to say, okay, we know that they're giving you a high quality product. So it gives them confidence that way. So I think those are the 3 main benefits to that model. And Environmental Farmers Group's got quite a unique model at the moment. So it's set up as a company and has a board of farmer directors. It acts as a cooperative. So members join and pay a small subscription fee on an annual basis. And then for every trade that is done, the principal amount of that trade, the value of the trade goes back to the provider. So at the moment it's 88% for the Environmental Farmers Group. 9% is shared equally on a per hectare basis between every other farmer in the water catchment. We separate them into water catchments, and then 3% goes back to the central function. So the Environmental Farmers Group, it's got two main aims, looking at delivering the environmental change at scale, which it can track and monitor because they're all working together. Farmers are all working together. And then secondly, to deliver that commercial return for farmers, because at the end of the day, you should be incentivized to deliver environmental gain, and the better your environmental gain, the more incentives you should get from it.
How do you feel about, does that give you more safety in numbers? I know it's like, well, you've got tenant farmers in EFG.
Well, I think this is where I'm sort of like running over the horizon now. This is where my other half goes, get yourself back here. Come on. So I'm thinking, okay, my landlord's got quite a lot of tenant farmers. We're all roughly the same sort of type of tenant farmers. We would be a lot stronger working together. I'm a big believer in collaborative working. None of us are best on our own. So I'm in the place now where maybe it's a group of tenant farmers that approach their landlord collectively. We share the cost of the advice that we take, and we go in and negotiate with the landlord as a group of people. And then potentially we come up with some sort of scheme where private equity, green finance, whatever you want to title it, gets involved. And maybe it is that we could actually monetize what we're doing far better by doing it as a collective. Am I heading that is the landscape
recovery. That's the landscape recovery grant from the top layer of Elms. That's what it's designed for.
So we're almost basically going back to taxpayer paying for it to get ready for when they don't. Because I think we all know maybe that's going to be the case eventually. Do you think? Actually, that's an interesting thought. Does the panel think that ultimately there isn't going to be taxpayer for any of this, and that's why we're going this way because private equity is going to pay for it all?
It will, yeah.
Where are we on that one?
Yeah, I mean, it's going to switch, really. I think that the government's concept is that the private markets will pay for all of this in the future. Maybe I'm being exaggerating there.
I don't know.
That's your job.
Yeah. But I think that the idea is that it'll transition a lot of payments over to the private markets.
That's what I'm thinking too.
But the barrier to entry for you at the moment with you and your neighbours is cost. How on earth do you pull that cluster together, pay for the legal advice, pay for the baselining with Tim, or do all those? That's the cost. And clusters are amazing, farmer groups are amazing, landscape recovery is limited, so there's only so much in the pot, only so many schemes. It's pretty good though. It'll give you £500,000 to do that with your neighbours, but there's a cost in pulling that application together that you might not win. So where does that, so there's still a lot of cash injection that you need at the beginning, whether through government or philanthropy or a savvy private investor who's like, we can support the project development, but again, we'll take a slice of the pie when it comes to market later on, because that's what's in it for us, basically.
It's quite high risk then.
For them or for you?
For us, as
well,
the farmers.
Not if you know what the slice of the bit they're getting is, because if they invest in it and nothing comes to market, they've lost their money. That's their risk. But if you say, well, you can have 10% of whatever the uplift is, and you feel comfortable with that, then I guess it's not so risky. And the great thing about landscape recovery, and I don't work for DEFRA, but the great thing about it is that these project development phases, these pilots that they're doing, are non-binding. So all of these projects, all the first 22 and the next tranche they're about to do, the one I did on the River Ada down in Sussex, 27 farmers signed up, and they all said, well, what if we don't want to do it? And I was so lucky as a facilitator at that point to say, you don't have to. And so then say, well then, okay, great, why wouldn't I do it? Why wouldn't I get a free baseline and a free business plan? Because after 2 years I can just say, see you later, DEFRA, thanks a lot. Which is a very good play from them, because I don't know how many farmers in the room would go, oh, I want to do a pilot that locks me in for 32 years. Yeah. No one. So that was a clever play, I think.
Let's start opening up, because I think we've got like 20 minutes left, and I'm sure you've got lots and lots of questions. This gentleman down here is first. If we could get the mic to him, if we could just wait for the mic so we can get your question on the recording, that would be great. And presumably the third round of NERF funding that's coming out will also help pay for farmers come together in practice if they're not in landscape recovery. So keep an eye on that one. So you were first, I believe, and then this gentleman here. If you wouldn't mind just saying your name, that would be great.
Yeah, thank you very much. Good morning, everybody. My name's Rob Hindle. Rachel, something I would say to you, and then I've got some sort of nerdy questions for Sophia, if you don't mind.
Yeah, I don't want nerdy ones.
I think it's really important when considering this topic that yes, it's a specific enterprise within a farming or an estate business, but it's part of an holistic enterprise, and it's really, really important not to lose sight of that and to think about how that the rights and responsibilities that you're parting with and you're signing up to fit within the whole. Because it's too easy to think, well, we'll just chop a bit off over there and that will be the environmental natural capital markets bit, and we'll just carry on doing what we do over here on the rest of it. I would seriously warn against that, because I think that will come back to bite, and I don't think it's the right way to design this as part of an holistic system, because we've got to back up and think about not just about the money, but about what this does in terms of nature recovery. Because let's not forget that this is driven by an investment in nature recovery. It's not purely a farm-based diversification program. So sorry about that. And then Sophia, on the nerdy stuff, I'd really like you to help us with exactly what are the interests in land that you are selling alongside your environmental outcomes. We hear about conservation, whatever they are, governance. Thank you. We hear about, obviously you talked about leases. I don't think you need to go into that, but it's what interest am I if I'm an investor, what interest am I expecting to have over your land alongside the deal, and what rights am I going to want to have to come in and monitor that you are doing what I'm paying you for, and that what you're selling to me is there, and what rights do I have over you as the vendor to make you put it there if you're not putting it there, and if you have a wildfire or a catastrophic storm event that blows all the woodlands down, how do I get my carbon back? So those are the kind of nerdy questions I wonder if you might give us a few minutes on. Thank you.
Do you want me to go? Really good question. I mean, when I have longer to talk about these things to other people, when I talk about the ways that you can model it, I then go into talking about, and here's your considerations about your length, your obligations as a landowner when you're selling off your units. So what would happen in the kind of three examples I spoke about earlier, if you were leasing your land to a third party, or even if you were self-delivering and selling off your biodiversity net gain units, for example, the local planning authority is going to want you and need you to enter into a planning agreement. And that might be a conservation covenant when we are capable and able of using them, or at the moment it would be a Section 106 agreement. And what that is an agreement between you and, at the moment, the local planning authority where you are. In the future, it might be with a responsible body, which might be a charity. It might be, again, it might still be your local planning authority or some other body. But you will be covenanting that for a 30-year period, in the example of biodiversity net gain, for a 30-year period, you will continue to manage that land in accordance with a pre-agreed habitat management plan or habitat management agreement. So it will be very clear from the outset what's expected of you during that 30-year period. And we as lawyers don't like the fact that you're covenanting to do something with the local planning authority, but you're being paid for that by your developer or your buyer of your units. So you've got this kind of triangle that doesn't quite match up. So what we'll always advise and say, and the marketplace is developing to do this, is that you get as much money up front from your developer, all the money really you want up front. So that has consequences in the respect that you're about to then get a load of cash up front, and how is that treated from a tax perspective. But the best advice we can give is you need to get your money up front. If you're doing a carbon project, similarly, you may be asked to enter into a Forestry Commission covenant, so similar implications. And then what happens if you breach that? a wildfire might be quite good from a carbon perspective, actually. But another example, if you don't comply with management, trees die, you don't replace them, whatever it might be, you would be on the hook to the local planning authority. But the idea is you've been paid to do that service by your developer. You may also, and we always advise that there's also a habitat management agreement as between the buyer of your units and you. So there'll be a sale purchase agreement when you sell your units and a habitat management agreement back. So you will have a direct contractual relationship with your developer as well, and that will enable the developer, if they so wish to, some of them want to, some of them don't, to have step-in rights. So if you aren't complying, and really they're paying you the money to buy your units, and a lot of developers we thought would just want to then walk away, pay the money, walk away, but actually lots of them are asking for step-in rights because it's reputational. It's going to be on the BNG register, Biodiversity Net Gain register, that it's your site that's offsetting their development. And so if it's your Persimmon or whoever it might be that's often in the Daily Mail, if someone gets hold of that saying that you haven't complied with your obligations and you were the offset site, they're going to want the ability to probably step in and charge you for it, but step in. So yes, one of your considerations when looking at any of these schemes are your long-term obligations, liabilities, and it's our responsibility as lawyers and your professional teams to just help you understand that relationship. But yeah, it's not so easy as you get your cash and you kind of don't have to do anything for the next 30 years. There are obligations and there are people you'll be covenanting with. Does that answer the question?
That's great. Thanks for that question, and thanks, Sophia. I think you were next, sir.
Thank you very much. Andy Guy, I'm a farm business consultant. I've got two linked questions I'm really concerned about for tenants. So I guess for Rachel, that there'll be, I think, 60-something% of the land is tenanted, I think. The first one relates to FBTs and the term of the FBT and the term of the agreement with some of these offers. There, you may have a 10-year FBT and a 30-year offer on the table. So that's question one. How do we tackle that? Question two, though, is a slightly bigger one, because there's lots of cases in history where landlords have had great opportunities to put sheep on the South Downs, and they've moved all the tenants off the Highland clearances. More recently, we're seeing a lot of tenants being bought out of their tenancies, or FBTs coming to an end for solar panel developments. And when you're talking about rents, I think you said 4 times the agricultural rent. Perhaps I got that wrong. But the temptation for a landlord to take land back in hand and the tenant to be left with the bits of land that are really, really difficult to farm and make money out of is a real concern for me. So how do we ensure that the tenant sector as a whole, as well as the individuals like Rachel, are protected from that?
Yes, it's a big question, and maybe we'll, I don't know if we'll have all the answers here, but let's hear your thoughts.
I'll start, and then great. I don't want to take all the. You're absolutely right. Tenants, it's so difficult that there isn't an equation where this natural capital marketplace that's there, or the nature-based solutions, doesn't work with shorter FBTs, because we've just heard you're going to be asked to enter into a conservation covenant, planning agreement, or a habitat management agreement, carbon lease, whatever it might be, that extends 30, 50, 70 years. So the only, what we're seeing in the marketplace is that landlords are being asked to enter into that even if you have a lease, I'll work backwards, even if you have a lease for 100 years, the local planning authorities, in the example of biodiversity net gain, are still asking the landlord to be a signed party to that conservation covenant or planning agreement, technically under a reading of the Environment Act, and we've made this representation. Under the Environment Act, they shouldn't need to ask the landlord to enter into it. It's just another bar for tenants being able to do these things, but they're insisting on it, most local planning authorities. So you're absolutely right. The only way that a tenant is going to be able to enter the marketplace is with consultation with their landlord. But what we can say is there's obviously been the ROC review, which you'll be aware of, and that's looked into this as well as other points, and they are looking at it. I mean, it's just a straight kind of landlord point that it's just, this happens with solar, with other things too. And on the point of solar, I'll just kind of mention that a few times recently we've seen a shift in the negotiation about additionality or stacking with solar, with biodiversity underneath perhaps the solar panels, and a revenue sharing arrangement. So if you're a landowner entering into solar projects, there is now an appetite. Historically, solar developers were saying, no, we'll not look at, we won't do the natural capital on here. It's like a stalemate. We won't do it and you can't do it. But now they're starting to say, well, we'll explore it. We won't promise you. We won't positively oblige ourselves to explore it. But if we do, we'll revenue share with you. And most of them will do their own BNG that they need to for their solar, but if they get anything above, they'll share that revenue with the landowner. So it's just a slight shift in the marketplace and feeds into the additionality stacking point.
Thanks, Sophia. Digby, did you want to come in?
Yeah, I guess the only thing is it's all about the relationship between the landlord and the tenant at the end of the day. So if you've got a good relationship, and we've got lots of tenants who are members and lots of farmers who are members, and landlords that are members, and landlords who put their tenants in as well. And so I think it's just building those long-term relationships, so that, because in my mind, the landlord's probably going to benefit from some of the longer-term schemes, but maybe carbon farming or something where it's part of your farming practice on a day-to-day basis is more linked with what the tenant's doing. So for me, that sort of philosophically works better. And then the other point is about how you exchange that obligation if you sell your land or if you are no longer a tenant on the land.
Thank you. Thanks for your question. I'm going to take, we've got not long, so I'm going to take a couple at the same time and then we'll shoot them back to our panel. So there's a woman here in the middle, and then I think there's a gentleman in green on the end of that line. I've only got one mic, this might be harder than I thought. But let's take your question.
Okay, so it's on.
Hi.
I wanted to talk about your products. And, you know, I'm producing meat and milk and things, and I've already having to do carbon footprinting. The sequestration is not included in that, but I have to do biodiversity surveys. If I end up selling it to somebody else, how does it affect my product? I can't sell it twice, and yeah, how in the future I might have to produce, you know, net zero meat or whatever it is to be able to sell it into the marketplace, and how that fits in with this.
So insetting question. Okay, well, we'll take your question, then we'll come to the gentleman in the green on the end. Yeah, go for it.
I guess, again, this is an opportunity for farmers in a way, because you have the power to be able to sell your biodiversity gain or your carbon gain to either your supply chain or outside your supply chain, so it gives you bargaining power. And it's not clear yet really within supply chain how the insetting market will work. There's sort of three ways it can happen. Either the supermarkets or whoever it is will either not take contract with you if you don't achieve certain levels. Two, you get a premium if you meet net zero or meet one of these levels. Or three is some sort of internal trading system, so that these retailers have to buy emissions reductions credits off you within the supply chain.
And the British Standards Institution is looking at the moment on developing what the policies might be around, or the standards might be around insetting, and how if they differ for offsetting, because I think we don't really want them to be different. But they are different, aren't they? Tim, do you want to come in?
Yeah, I might. So we've just started a project with Sainsbury's because, like you were saying at the beginning, Helen, so these corporates now need to report on their risks and dependencies in their supply chain, and they need to start setting targets that they're tracking towards, which requires them to sort of understand more concisely what's happening on the farms that supply them. And I think that is opening up quite a bit of transparency, which then goes to Digby's point. It makes it easier for the food retailers to start to trade with you, whether that's insetting or, you know, paying premiums on products. So again, I suspect if you're selling into sort of the food supply chain like that, they're going to want to buy more services from you over time. So it's going to be worth discussing that with them and exploring, you know, is there things that you could do that they would actually fund, you know, for you? So that's just conversations I would look to be having with them.
Ivan?
Yeah, well, just and it again, it's like the landlord and tenant relationship. It also depends on who you're selling to within the supply chain. So I was at a conference with a roundtable with 3 Keel and Nestle last week, and Nestle and 3 Keel are doing amazing things with their suppliers, and they're building systems where the buyer, Nestle, is enabling the landowner to change through investing in land use change systems, you know, whether it's cover cropping or reducing inputs or whatever that system is. And Tesco are doing it, and Sainsbury's are doing it, and everyone's doing it to varying degrees of success and support levels, but it will be in part about working out who you're selling to if you don't know already, and then trying to work through it that way. Because what I do, or what we do, is selling ecosystem services. We're not going to be selling it to the food industry. They are not our market, because they're not interested in land use change. They're interested in sustainable food production, and so that's their focus, and it will grow, and it should grow. But it is different in setting and offsetting. So if you are producing, which almost everyone in this room will be, the opportunity is with your supply chain, I think. And then the bits around the edge, the habitat gain, you know, the net gain, the non-productive land, the opportunity is outside the supply chain, I would say.
So really don't go selling stuff yet if you are, because we're anticipating your supply chain is going to come to you at some point and say, we'll pay you, or you just got to do it.
I know anecdotally from a farming element, from a producer element, that's happening. That is happening, like, on the hoof now. So I think that's, again, it's another one of those warnings. Talk to people before you do anything, before you jump. Be really careful what you do, because I know that's en route.
And I think if farmers can approach the supermarkets rather than supermarkets approaching farmers, it gives you more leverage.
It does feel like we've got probably like a 3-year window to actually get supermarkets and retailers to pay and help farmers reach those environmental targets that they need before they just say, this is now business as usual.
I think they might pay for it initially. They won't in the long run.
So get in there now. So I promised this gentleman in the green on the end a question, and then I think we're probably at time. We'll see. Okay, all right.
Hello there. My name's Ian Horsley. I farm in the Malvern Hills. We've had a bit of discussion about the money that's available sort of potentially upfront, selling things like biodiversity net gain credits, or the units. I wonder if the panel has any idea what that might do, signing up to 30-year covenant, maybe improving your land into a species-rich grassland, what effect that might have on your underlying land value in the long term. Is that negative?
Ivan, it's probably
well, very, very difficult to say. The land I'm working on, we're hoping will be in nature in perpetuity, and it'll be owned by a company or a trust. So it doesn't really apply to what we're doing, which is a privilege, because every landowner it does apply to. You know, in theory, at the moment, you could plough up that grassland after year 30. The reality is you probably won't be allowed to by then, because the world will be on fire and we'll be protecting every little bit of grass we've got left. So the risk is real, but who's to say that asset won't be incredibly valuable because of those changes, because of climate change, and because of the way the world is going. The healthy soils and the grasslands will have a huge value associated with them because of the ecosystem service they're providing. So I can't even begin to give you an answer, to be quite honest with you. You know, you take the Knepp estate as an example, or the house prices have gone up around Knepp, so locals who already own the houses were feeling quite good because they're in a lovely place. People who want to buy affordable housing are not so happy because the house prices have gone up. So, you know, there are going to be a lot of changes, and the land itself, if it has the capacity to continue generating revenues through being a species-rich grassland, then why wouldn't you see the price being sustained? But if it doesn't, because all that additionality is gone, then maybe it will have gone down because it will be under some protection, triple SI, whatever the case may be.
I'll add to that. I think in the that may be true for the long term, but what we're certainly seeing in the short term is that you can't possibly do anything other than devalue your land if you're about to suck out all this capital, selling off your natural capital. So longer term, it may then recover back up and may even go above and beyond. Absolutely take your point. But in the shorter term, you've sucked the capital out by selling your units. Of course, it must have gone down, the value. And I'll just mention with that one, lending. If you have an existing lender that has security on the piece of land that you want to enter into one of these markets on, you obviously need to be having the conversation with them, because they'll need to give consent. And I would be very surprised if they are going to give consent without wanting additional security, or at least some of the money that you're about to get from pulling the capital out. Because if you go and sell your land, you know, the day after you do one of these deals and take however many £1 million from selling the units, all you're left with is a piece of land that's got a 29-year covenant left on it to carry out obligations. So I take your point that it may recover over time, and then equally just consider as a consideration, of course, as lenders, there's lenders in the room, but if you want to use that land in the future as new security, the lenders are, in our experience, and I may get corrected in the room, but they're quite nervous about these opportunities. And that's natural. It happened with solar, it happened, but they'll have to just kind of work their ways around it. So if you have lending or if you want lending for projects, just be mindful. Give yourself time to do the deals on that.
Maybe don't spend it all at once, probably. Because, I mean, there is going to be legislation coming in that will stop you from spending it all if you're going to be selling it. I'm looking at Dave. Have we got time for one question? Okay, we'll take one more. It's a gentleman here with his hand up. Sorry, I haven't really come over this side. Sorry, I've got my back to you, but...
Guy Singh-Watson from Riverford Farms. I should caveat what I say, but full disclosure, I am congenitally resistant to the idea of trading natural services, so view what I say in that context. I am concerned that all this depends ultimately on the credibility of what you're selling, and the credibility ultimately lies in the hands of either the voter, whether they give credibility to that political system, or the purchaser of the food, if that's it, or the one who's giving brand value to the business that's doing the right thing. And I'm just really concerned that this isn't credible, because I just don't think we have the ability to measure carbon with that level of accuracy. And everyone assumes that we do, but whenever I ask the detail, it turns out we don't. And when you go further into biodiversity credits, it's just jaw-droppingly complex and nuanced. And I love this discussion because it's so much more nuanced than the one I took part in last year, where people were bravely talking about selling carbon credits in a way that had no credibility whatsoever. So I'm glad that it's moved on, but I am concerned about the overall credibility, and it will fall apart if these schemes don't. I mean, capitalism is a very, very blunt instrument. It has one metric: money. You're talking about something with many, many metrics, many, many stakeholders. Where I'm sitting at the moment, I would say it's doomed to failure.
Do you mind if I go very quickly before I go Tim on that? At the end of the day, I think there's an ambition to get to net zero, and there's going to be an obligation on all organisations to report on the impact they have on biodiversity and on water systems. And so that, in my mind, offers the long-term opportunity for this market. And in terms of how it's measured in the short term, yes, you're right. I think a lot of the stuff is very rough, but I think that principle of roughly right rather than precisely wrong, over time, things will get measured better and better, but it's going in the right direction.
Tim, do you want to go?
I mean, I slightly agree. It's a bit of a dark art, really, fundamentally, because it's a bunch of decision makers who are working out matrices, and that's what the calculations are built on. But I do, like Digby, you were just saying, I think what we're seeing is food retailers, water companies, they are desperately yearning for resilience in the supply chain. And they know the only way to get that is to pay people to do stuff. Obviously, we have to keep them honest, and there has to be a bit of light of transparency shone on that. But I think, so the food retailers are saying they invest in de-risking their enterprise fundamentally, and that means soil quality should be being improved. We will have to see whether they actually do that, because you look at things like southern Spain, it's obviously turning into a desert, no one's really doing anything about it, and so capitalism clearly isn't working there. So I think if they get the right pressure put on them, which requires a transparent, open system, the agenda will be forced towards resilience, which I think is in our collective interests. But if there's any if the system is opaque in any way, shape or form, they're all going to try and get out of it and get someone else to pay for the restoration. And so I think it's really about forcing an agenda of transparency across the whole supply chain is the only way to make capitalism honest, fundamentally. And that's kind of how we see it. I can't see how we're going to restore functional ecosystems at scale in any other way. And,
I mean, the British Standards Institution is actually developing standards to oversee all of the codes, because I know soil carbon we're all a bit iffy on, is the science there or not, whereas woodland carbon code, I think there's a bit more science behind it, peatland carbon code to some extent, and I know some of the other codes that developed, the science isn't there, that's why we don't have codes for salt marsh carbon at the moment, for example. So I know that work is happening through the British Standards Institution to really make sure that all the metrics are science-based, and if they're not perfect, because I think they're not going to be at the moment, at least we're transparent enough to say where we think some of the discrepancies lie. Can I just put a mic in front of you so we have you on recording? Sorry. Stop you mid-flow.
I mean, so much of the credibility of it is around where you draw the envelope, and that keeps kind of moving from, I mean, I've been trying to do this for 20 years, and it does. The envelope, when you start talking about rewilding, and you're displacing food production to somewhere else, I mean, that's something that's just not even discussed, and I think threatens to really undermine the credibility of some of these schemes.
Well, I could talk about this all day, my favourite subject. Everyone in this festival, in this conference, is trying to work out a way to grow food in a sustainable way. And Guy, you most of all, you've been doing it for 20 years, and everyone knows and loves what you do. The land that should be rewilded is of lower productivity value. And Henry Dimbleby was on the main stage last year, and you would have all heard him. And if you haven't read his new book, Ravenous, you should be reading it. There is space for more nature, and there has to be space for more nature, or we are doomed. There is no food production at all if we don't make more space for nature, whether that's rewilding or around the edges or in the middle of a productive system. And so I would argue, no, we're not necessarily displacing land for food production through rewilding lower grade farmland. But we do have to change the way we eat. We have to choose the food most of the people in this room are producing. We do have to eat less meat. All the things that we hear in all the publications from the Sustainable Food Trust, who will be here today, from Henry Dimbleby, from everyone, there is a responsibility on us as consumers to change, and then we can have space for nature and for food production, both in the farm system and around the edges. We're not talking about rewilding England. That is not what I'm saying here. So we should talk later anyway. But the capitalist system, you know, we function within a capitalist system. I'm not a revolutionary. I'm not a politician. And capitalism has destroyed nature because it hasn't put a value on it. And whilst I would love to be part of a revolution where we live in a circular economy, and I hope we move in that direction, again, we have no time to save the world, to put it in the most dramatic terms possible. And today we are in a capitalist system, so if it continues not to have a value on it, it will continue to be abused, destroyed, and raped and pillaged, which is what's happened. So today is the moment where we have to put a price on it, we have to value it, we have to build it into the farm system, we have to rewild some areas. Otherwise there's nothing, there's no people, there's no food, there's no anything. So let's do that for the next 10, 20 years as a sticking plaster whilst we rebuild our society at the same time.
And just, I mean, I agree with Ivan. If we work in the Green Finance Institute, we're about mobilising private sector money. Do I think it's the best thing ever that we have carbon markets and biodiversity net gain and this is where we're going? No. But do I think in the next 10 years, can we get private finance moving through these markets so that we have a chance at restoring some of our landscapes and getting some money into the hands of farmers? Yes, I think they are a means to an end. But a deep conversation. I'm sure you're dying to come up and talk to our panel with lots of questions. But I'd like to leave the closing words to Rachel. How do you feel? More confused, less confused?
Well, shall we just stay here for another 4 hours and get a few beers in, to be quite honest? I'm just a farmer. I want to leave our farm in good health, whether that's environmentally, financially, because without the financial elements, the farm won't be there. I want a secure future for my children and their children. I think that's what we all should look for, is it not, in life? And I've got to find a way to make this work, because I cannot rely on what I receive for the food that we produce on our farm alone. That is the basic economics of it. And I have got to address whatever avenue there is out there to secure the future of our farm. And I've learnt a lot today. Whatever happens is going to have to be done in collaboration. Whatever happens is going to have to be done with eyes very wide open. And I think, do you know, we're doing a lot on for the environment on our farm. We've secured taxpayers' money for that for the next 6 years. I'm just going to take a breath. I'm going to watch. I'm going to learn. And I'm just going to try and seek what is best for our farm and our circumstances. Because do you know what? Every single farm is different. We are all different people. We throw the weather into the mix, and all of a sudden, we're all looking for different things. I just want to secure the farm, the environment, and the future. And I think that's going to take time.
Thank you. Thank you. Thanks very much to our panel. It would be remiss of me not just to mention that DEFRA has actually commissioned us to develop like a toolkit that can help farmers really try and think through some of these really big considerations around natural capital markets. So you can come out and with a decision at the end of whether it's right for you or not necessarily that you're going to go do it. So if you want to come and talk to us about that, we are over at the DEFRA tent from now till 12, and we'd love your input and feedback into that. But thank you so much for coming and sharing your morning with us. Thank you.